2 years. But because the restructure, because they already appointed the CEO for REE energy, yeah. So I expect personally, I expect it to be sooner. So this is the first floating solar farm of IEE Green Energy, and we expect that this model can be applied for the rest hydropower portfolio because they do the solar panel on the hydropower plant reservoir. Yeah. So we expect it can scale up the sky for.
The name itself, green energy, assumes that it's renewable energy only.
Because they keep PPC and the coal-fired power plant under the REE holding. So REE energy is completely green. Yeah. So that's why it can attract investor on that.
Who's doing the deal on that?
No, I don't know.
Sao để bây giờ?
Keep an eye on it. Figure out who's doing the deal.
Definitely. Yeah, we will watch. Yeah, but we will not know. Yeah, we will
What
watch.
is the typical ROE of the renewable energy project?
They're talking about IRR. So currently, the tariff of renewable floating still have some subsidy. So IRR around 12%. If a control cost, then it would be around 15%.
You say tariff, this is the tariff we use to the grid?
The tariff that they can get from EVN.
So they get money from EVN.
So they sell to EVN, and the tariff currently EVN.
Selling price.
Yeah, the selling price. Yeah, consider.
And one reinvestment in a new renewable project, how much money comes from loans and how much money comes from its own cash?
So the financing structure usually 30% equity and 70% debt. But for renewable, because they have subsidy in tariff, so the equity portion should reduce to around 20%. So it can be more leveraged depending on the company. Yeah.
So the leverage ratio could be 3 to 4 times. You multiply that with the IRR 12%, then ROE could be pretty high.
What, how can leverage be 4x?
Yeah, sorry.
Because that could be as high as 80% of the investment cost.
It should be at least 20% in terms of return on equity. Yeah, but because we usually talking about IRR rather than.
The IRR is asset IRR. You can get that higher price.
That's right. Yeah, equity and IRR. Yeah, it should be much higher.
idea of the company rolled out some initiative to increase actual capacity of gel to manufacturing, and also introduce also save cost. So company said that gel to factory can operate at 120%. So overall we see there's a upside of current forecast. We already have a high room for listing 75% CPC.
So when CTD also announced its treasury share buyback plan of 4.9 million shares, equivalent to 6.2% of the outstanding share. The purpose of this buyback is to prepare for the new ESOP plan, upcoming ESOP plan from CTD. We also think that a part of this treasury share buyback, a part of the amount of this is also coming from the ESOP that already issued for previous top management. So now because a lot of top management, the old management already resigned, so CTD buy back these ESOP from the employees, ex-employees, and additional new floating shares so they can prepare for the upcoming ESOP. Before this plan, CTD already has 3 million treasury share, which are equivalent to 3.7% outstanding share. So it means that in total, CTD after this treasury share buyback, we have about 10% treasury shares. The timeline for this will be in Q4, and based on the current market price, we estimate that CTD will have to pay out approximately 345 billion BND for this treasury buyback plan. By the end of Q3 2020, CTD cash outstanding is still very healthy at 3.6 trillion BND.
We published our monthly fixed income report yesterday to review bond money and FX market in November. After issuing 2.6 billion worth of government bonds in September, that was the highest monthly level in 5 years. The state treasury reduced its bond issuing to 1.4 billion in October and just only 870 million in November. So the 11 month, the BSP has issued 12.2 billion worth of government bonds. This amount has surpassed the BSP original target of more than 11 billion for 2020. But in November, the BSP has raised its issuing target for this year to 13 billion. So the issuing amount in 11 months has reached more than around 93% of the new issuing target. We saw bond yield falling further in November in both primary and secondary market. In secondary market, 5 to 15 year yields fell by between around 10 to 30 basic points. And there were several reasons for this. Was because first there was nearly 870 million of government bond came due in November, so that triggered the demand for reinvestment. Second, it was because of ample liquidity in the banking market, in the banking system. Credit rose only less than 8%, and for deposit rose more than 10% already. That was in the same period last year. We saw both credit and deposit growth at around 11%. And also the third reason is because the SBB has purchased nearly 3 billion USD for its reserve. So at the same time, this move injected an equivalent amount of the dome into the banking system. The ample liquidity in the banking system also kept the interbank interest rate to remain at a recorded low level overnight. Was at around 0.1% as of the end of November. In the FX market, after purchase around 3 billion USD for foreign reserve, in November, the SBB reduced its bid price in its transaction office to 23,125 dong 125. So that was 50 dong lower compared to the previous bid price. The SBB move was because of several reasons. First is because of strong USD inflows, especially from trade surplus. Second is because the SBB has purchased a significant amount of USD for its reserve this year, at around 17 billion year to date, 16 to 17 billion year to date. And third is because the SBB is somewhat under pressure. The investigation of currency manipulation from the US. The new bid price means any bank can purchase, any bank that has surplus amount of USD, they can sell to the SBB at 23,125 dong. So this is also the lower band for the USD BND exchange rate at the interbank market, because the banks would better sell to the SBB at this price rather than selling to anyone else in the market at a lower price. So after the SBB reduced its bid price, the USD BND FX rate in the interbank market appreciated gradually from 23,175 to around 23,128 in the past couple of days. That price is very close to the new bid price of the SBB. So this price also equivalent to around to an appreciation of around 0.2% year to date. So for the outlook, we normally see a credit growth speed up at the year end, but we think liquidity will remain ample in the banking system this time. That should keep interbank interest rate at low level and also continue to depress yield further. We think in the FX market, the FX will continue to trade close to the SBB new bid price, and I think even the SBB reduced its bid price, the SBB still can purchase more USD in January, and this idea is not supported, not only supported by the strong trade surplus, but also because the remittance season is coming. So Vietnam usually receive a lot of remittance before Tết holiday. We all know that the global economy has been struggling this year, but and that could affect the remittance inflow. But this still coming. So I think like the SBB can still purchase more USD for its reserve in January. So that's the summary of our fixed income report.
Have you heard any updates on currency manipulation from the US?
Yes. So I heard from several people from that close to the US, and they are talking about they are guessing about around 8%.
Sorry,
Tariff.
what's this 8%?
So regarding to the currency manipulations investigation,
Yes.
now they are talking about 8% tariff applying into Vietnam. So
Like 8% broadly across everything?
yes, so that's one of the figures that they are talking about. So
8% across the board, electronics, machine, garments, textiles.
for all. So that's what they're talking about. So because Vietnam, from the Vietnam side, I feel that they are very from Vietnam side, I think like they are still like very relaxing. They don't think that would happen, especially after Biden got the power. And
Why do they think that?
because they think that Biden policy would go easy for Vietnam, and I think that and they think that would go away after Biden took office. But from the U.S. side, I heard from those Democrats who worked under Obama and Biden administration, and they worked for the USDR before, and they said that it wouldn't go away that easy. And they said something like there are significant concerns that the Trump administration would go ahead and apply and announce, not apply, but announce tariff before they leave the office. So that is one of the risks.
Can you just remind us, is there a timeline for a final decision from the USTR on this issue?
The final decision is they have 6 months in schedule. No, they have 12 months. They have 12 months. They need to make the decision within 12 months since the start of the investigation. So, which means the deadline for that is October 2021. But then, because in the past case, we saw in the past three cases with China, EU, and France, they all apply that. For China and EU, they apply they announced tariff after 5 to 7 months since the start of the investigation. And for the latest case with France, they announced tariff after 12 months. But because from November to January, there was just only less than 4 months. So many people think that they would not have enough time for that to make the decision before they leaving the office. But now, like I heard from the US, that there's some possibility that they could make the decision before they leave the office.
Ouch.
So
Hey, can you run a model? Can you plug that into your model? Let's assume that they stick an 8% tariff on that. How much damage it would do in exports, GDP, all that stuff?
So that could affect around 10 billion.
Of exports. So trade surplus right now is 20 billion. You whack that and trade surplus would come down to 10.
There were several figures. I won't calculate that again, but there were several figures around 8 to 10 billion that would be affected by.
And how much of it? What percentage of that would be on GDP? On 10. So what's GDP? 300 here? I don't know. What's GDP?
There's no way that they could apply a tariff across the board because they don't even look at China.
It's fine.
It's a matter of Trump announces it's going to affect the markets. Maybe they can, maybe they can't.
They don't even apply that to China.
It usually for a particular product rather than the across the board.
Well, in China, when they put on it like 607 billion, in Vietnam, they could just say, okay, 50 billion, and then we'd be paying. Trade is, what, 69 billion? So they say on the top first 100 billion, okay, that's pretty much encompasses everything. Okay, thanks very much for the insight.
I will update if I hear anything from them.
Thank you.
Thanks.